to SPY S&P 500 update. I want to be super quick with this one update. So today 1.65 SPY, that's how much we are up. Pretty decent recovery. We did reject that at 200-day moving average, but this is the resistance I'm watching. Next resistance would be 50-day moving average, $399 levels. So the strongest sector today, communications, tech, and then financials. If you take a look at what represents SPY, S&P 500 in terms of like weighting, you can just go to Thinkorswim and just go through the like what sectors have a big say. So technology, we know 28%, healthcare 14%, financials. I wanted to focus on financials a little bit because, well, without financials, you are not going to see S&P 500 rally, or a lot of people say it's fake out when a few sectors bring up the S&P 500 and everything else just pretty much is down, especially if it's financials. So today everything tried to bounce, and most volatile stocks. And that's what I wanted to show today. If you take a look at the like top maybe, okay, let's go 10 top 10 stocks that were the most volatile and the most volume traded with. These are most of them banks. Bank of America, First Republic, Charles Schwab, Tesla was pretty volatile, Apple, KeyBank, another regional bank, and all these guys. So, and some chip makers are doing very, very well. Tech names are basically holding up the market. But another thing I wanted to show you is, we talked about this yesterday, is the percent of stocks in S&P 500 that are above their 5-day moving average, 20-day moving average, 50-day moving average, 100-day moving average. And you can see percent of stocks above their 5-day moving average, 42%. Yesterday it was super low. So you can see that the ultra short-term momentum picking up to the upside, but it doesn't mean that we're clear and we're just going to run from here. We have a big option expiration coming up, which is 17th of March. This week, Friday option expiration is the biggest one in terms of like monthly option expiration and monetary expiration as well. So this chart represents all these volumes of puts people are holding, and you can see the strike prices right here, and this part represents calls, and you can clearly see how market is positioned. There are a lot of puts were purchased, and when you see market is when consensus very, very one-sided, right? It's not 50-50. People are like going crazy buying puts. Market will try to close at the maximum pain, which is the strike level price, where most of the call buyers and put buyers are going to lose money. And for this week, for March 17th, that number is 399 for SPY. And again, it changes as volume changes, but you can see like total put open interest for that date 3.2 million, and call open interest 1.7 million. So you can clearly see there are more puts are about to expire, and then you're gonna see maybe really, really decent volatility, but volatility is still here. It's not going anywhere. And also I wanted to mention the volume, SPY volume. Last time SPY traded with this big of a volume, daily volume, 100 and let's say 150 million plus. I went back to, just on a chart, to last year's May. So basically in May, I just highlighted in a square. This was the only time we went, I mean, there were day spikes right here, one day, or basically 1 day spikes that were reaching that 150 million. But the last time 3 consecutive days were this level. That's where we dropped from 420 all the way to 480, I believe, 380. So, and what happened next, basically. So you might experience something like this, and then maybe summer rally, and then fall comes, we're gonna drop, maybe make lower lows. So, but again, I'm just speculating, but I'm just looking for correlation. Like, when this much of a volume shows up, what happens next, how it comes off. Because the most recent data represents the freshest emotions, because charts are basically our emotions, everybody's emotions. And I'm sure all these people are still here. Maybe some people have, well, got wiped out throughout these years, last 2 years. But this is the most recent data. I don't want to focus too much on it, but you can just go through yourself on that one. Put to call ratio, pretty high. That means a lot of people were buying puts yesterday, the day before yesterday. And today's SPX put to call ratio 1.4. So that means people didn't buy as much puts. And you can see it on volume option, most active stock options today's. You can see like Tesla had the biggest option flow today, volume traded, and 53% of that volume is calls. Apple 55% calls. Nvidia, well, 56% were puts. AMC, Bank of America, 65% of today's volume were calls. Meta, Facebook's 58%, 59%. Amazon, AMD, 50%. So more people bought calls today on these names, okay, the big large cap names. So and if you take a look at the heat map, yeah, broad rally. So for S&P 500, that's what you need. If a couple sectors are doing poor, you will not see, especially these three big ones: healthcare, tech, and financials. If any of these sectors are down, most likely you're going to experience that overall market will be down as well, or maybe even flat. So that's the pretty much update, and to the upside, I'm basically watching this 399 as a max pain if SPY gets back above this 200 moving average, which is 393 at the moment. And to the downside, well, 380, 377, that's the level I'm watching basically from here as support levels. So thanks for watching. I will see you in the next update. Take care. Peace.